starting off on the monthly time frame. Looking at this EMA ribbon here, we can see that it is holding up quite nicely. So on the monthly time frame, as long as we see this support held, the expectation is higher. And we can also see this previous level of resistance that led to a over 60% dump over here is now looking to be flipped into support. So it will be used as a pivot point to continue higher into a new all-time high. And on the monthly time frame, you could argue there's this macro double bottom over here that's using the bear market low and the 2025 April low as the two key levels of support. That second bottom over here was bouncing off of the 100 EMA exactly. So the technical target for this, and it's funny that the neckline is also sitting here. So what we need to see going forward is 3.76k reclaimed for the monthly candle close. So currently 3.8k is slightly above at the moment. We need to see that monthly close, and that's coming up quite soon to hold above that key level. So there are two ways we can target this, because we can look at the bear market low or the most recent 2025 low. I think it also makes sense to use this target because this is quite a smaller target compared to that one, and it could be targeting a level of resistance, finding resistance, dipping back down before targeting that one over there. So let me just quickly show you. There's another double bottom over here, and if I were to now move over these measured moves, we can see, you start to understand what I was trying to say. So you can see there's a target up at 13,000, but that might not happen now. So this is a more conservative target. Let's now place the fibs on these two dumps. So we have some confluence with the 1618 here at 7.8k, and then looking at this Fibonacci right over here, we have some confluence with that 1618. And look at this. This is potentially a more accurate Fibonacci as it's targeting the 1272 and the 1618 here. So this is where I'll be looking for ETH to actually target, as long as it successfully holds the 3.76k area as support for the monthly candle close. So that would be the monthly analysis. We never know, maybe on the lower time frames it might look slightly different. So on the daily time frame here, we can actually see the liquidation event held this level of support exactly. So that's absolutely incredible, because we're seeing what led to a minus 60% dump previously is now bringing demand, because we can see the bulls entered from here, price ran back up into an expected resistance. So we have to expect a rejection. But as long as this area continues to be support, and with the 200 EMA actually being slightly underneath it, you can see there was a loss of this key level, but a recovery thanks to the 200 EMA. So you could argue we can now create a box between these two levels, and then we'll zoom back out to the monthly time frame to look at this right here and pull it backwards. So look to the left, structure leaves clues. We can see this was an area of previous resistance here. In fact, on the monthly time frame, we can actually see a bearish head and shoulders pattern within this area and the breakdown. So this is a valid area of resistance, because with a head and shoulders pattern, the head is actually a fake breakout. So there was this area of resistance felt here. You see the breakout. We're now expecting it to be retested as support for continuation higher. But unfortunately, it falls back under and confirms it as resistance. So we know that that is the true area of resistance. We've now created an area between that high and marked out the most recent daily time frames, liquidation events, wick low. And we can now see that 3.4 to 3.7k is the area that on the monthly time frame Ethereum needs to hold, as well as on the daily time frame. So we want to see the reversal from this location. We need to see Ethereum recovering all the moving averages now that it's started to form bearish crosses all throughout this area, over here and here. We need to invalidate these bearish signals, and that can only be done by the help of this 200 EMA holding up, as well as those previous monthly resistances that led to a minus 60% dump, now turning into support, acting as an area of demand to help recover the bearish crosses. And by doing so, there would be one more area of resistance. I can show you this by placing the fibs on the current range high and low. This shows that 4.6 to 4.7, 4.8k, we'll round it up to, is the final area of resistance. And by breaking beyond that point, the reversal wave would be created, giving a different bias, which is further expectation of higher. Why am I saying different bias? Because technically speaking, guys, even if we see the bearish crosses recovered, this is an area of resistance, which we've kept on going lower from. So the argument is that we can still continue lower. Even if we see a bounce over the following days and weeks, it can still lead into lower lows. So what we need to see is the recovery of the moving averages, the bearish crosses, as well as taking out this red zone. By that point, we have a different set of expectations. The primary path becomes different because at the moment, the primary path is retesting either here's resistance or getting up into here and then dumping down, whichever it chooses to dump from. We're trying to invalidate that bearish path because we're constantly now seeing lower lows in the immediate short term and the lower highs. So the only way we negate this bearish trend is recovering the bearish crosses and then also flipping the 786 and 886 into support. That then creates the reversal wave, giving these expectations as the targets. And we can see some nice confluence because there's a random red line here. Let's now head back to the monthly time frame and remind everyone that this is now lining up. So some daily analysis lining up and tying into the monthly analysis, which is also a measured target out of this double bottom over here. So today we've come to the conclusion that if ETH can successfully hold 3.4 and 3.7K with the monthly close, and over the following daily closes leading to the end of the month, of course, continue rallying from here, we should see continuation to my very first macro technical target of the bull cycle, which you could argue could be a potential top at the 1272 Fibonacci 7.7K. This could be the potential top, but there is a chance that it falls back, finds an area of support to continue to 14K. So I'll be here to update it as it develops, but as of now, that would be my expectation, $7,000, because it's also the most recent dip of this year. Taking it from the low back to the neckline of the bullish pattern, which is this double bottom over here. It's also the neckline of a more macro double bottom, this being the first bottom, neckline, second bottom. So we got two double bottoms here, same neckline, two different targets. Those two targets are Fibonacci targets, so adding that layer of confidence. Then we did some daily time frame analysis and marked out those Fibonacci's, also pointing in the same direction. Like, subscribe, comment, and share. If you wanted to learn my strategy, use the links down below. Take action on this 30% discount while it lasts until Friday the 7th of November. This can be applied to my Discord, ebook, or one-to-one mentorship plans. So check them out and I'll see you over there.